In times of economic uncertainty, investors often seek safe havens to protect their wealth. With stock market volatility and concerns about inflation, real estate has emerged as a compelling option. But is it truly a safe haven? And what strategies are smart investors employing in 2025? Real estate offers tangible assets that can provide steady income and potential appreciation. Unlike stocks, which can be subject to rapid market swings, properties often retain value and can generate rental income even during downturns. This stability makes real estate an attractive choice for those looking to diversify their portfolios. Another strategy involves focusing on markets with strong fundamentals. Investors are analyzing local economic indicators, population growth, and housing demand to identify regions with potential for long term appreciation. By targeting areas with robust job markets and limited housing supply, they aim to capitalize on sustained demand for real estate. One avenue gaining popularity in investing is real estate investment trusts, or REITs. REITs allow investors to gain exposure to real estate markets without directly owning properties. They often focus on specific sectors like commercial, residential, or industrial properties, providing a targeted investment opportunity. Additionally, REITs typically offer higher dividend yields compared to traditional stocks, making them appealing for income-focused investors. It's important to note that while real estate can offer stability, it's not without risks. Market conditions, interest rates, and property management challenges can impact returns. Therefore, thorough due diligence and a clear investment strategy are essential. Furthermore, some investors are exploring alternative real estate investments, such as crowdfunding platforms and private real estate funds. These options provide access to a diversified portfolio of properties with lower capital requirements, allowing investors to spread risk across multiple assets. In conclusion, real estate presents a viable option for investors seeking a safe haven amid economic uncertainty. By leveraging REITs, focusing on strong markets, and exploring alternative investment avenues, smart money is positioning itself to weather financial storms and achieve long-term growth. If you're considering adding real estate to your investment portfolio, consult with financial advisors to tailor strategy that aligns with your goals and risk tolerance. If you're looking at residential real estate, whether that's a primary home, a second property, or even your first rental, we can walk through the local market data, rental demand, and appreciation potential, and even different financing strategies. Arizona in particular is still seeing some strong population growth, limited inventory, and long-term appeal, which means that even in a higher rate environment, there are smart moves to be made. It's not about timing the market, it's about understanding it. If you're hearing all of this and thinking, okay, but how do I actually get started? That's exactly where someone like me comes in. Because while real estate's a powerful tool for building wealth, it's not one size fits all. What works for a hedge fund or a cash investor in commercial retail might look totally different than what it makes sense for somebody buying their first rental in Phoenix or Scottsdale. Now, if you're more interested in commercial opportunities, maybe small office, retail, or mixed use properties, I can help evaluate some things like vacancy rates, cap rates, and submarket strength, especially in places like Scottsdale, Tempe, or Central Phoenix. We're seeing pockets of opportunity depending on your goals and your appetite for active versus passive income. The truth is, real estate is one of the most flexible wealth building tools we have, but only if you match the right strategy to your financial goals. Whether that's cash flow, appreciation, tax advantages, or long term security, there's a path for that. You just need someone who understands how the pieces fit together both locally and in the broader economic landscape. There's also a growing wave of investors getting into short term rentals, furnished midterm housing for traveling professionals, and even house hacking. And again, strategy matters. Just because everyone's talking about it on TikTok doesn't mean it's the right fit for you. But if it is, I can help you understand what regulations apply, what neighborhoods are performing, and how to actually run the numbers like a pro. So if you're thinking about adding real estate to your portfolio in 2025, whether you're a first-time investor, an experienced buyer, or just curious what's happening in the Arizona market, reach out. I'd be happy to talk you through your goals and help you explore what's realistic in this market and what's smart for the long haul. And if you're still watching, drop a quick comment. Let me know what your biggest question is about investing in real estate right now. Are you worried about rates, unsure about timing, curious about difference between passive and active investing? I'd love to hear from you and I do respond. If this video helped you at all, tap that like button, subscribe if you want more data-driven breakdowns like this one, and I'll catch you in the next video.